March 6, 2026 Morning News Summary, New York Times, covering 10 last night to 6 this morning. Don't forget to subscribe before we start, so you don't miss out on the latest international news. News 1, ECB holds rates, revises inflation outlook. The European Central Bank kept its key deposit rate at 4% as expected but revised its 2025 inflation forecast down to 1.9%. President Lagarde emphasized data dependence, stating a rate cut in June is very likely, if projections hold, leading to a 0.8% drop in the euro against the dollar. News 2, U.S. Treasury yields spike on strong jobless claims. Weekly U.S. initial jobless claims fell to 205,000, significantly below the 215,000 forecast, indicating persistent labor market strength. The 10-year Treasury yield surged 12 basis points to 4.35%, pressuring equity futures and strengthening the dollar index. News 3, OPEC Plus agrees to extend production cuts through Q2. OPEC and its allies confirmed a collective extension of voluntary output cuts of 2.2 million barrels per day into the second quarter. Brent crude prices rose 2.1% to $84.50 per barrel in early trading on the tightened supply outlook. News 4, Japan's Q4 GDP revised upward on strong capex. Japan's revised GDP data showed the economy grew at an annualized rate of 0.8% in Q4, up from a preliminary contraction, driven by stronger-than-expected business investment. The yen strengthened slightly to 148.90 against the dollar on the data. News 5, EU unveils AI Act implementation roadmap. The European Commission released its detailed 12-month implementation plan for the landmark AI Act, setting strict timelines for prohibited AI systems and foundational model governance. Major tech stocks in Europe saw mixed reactions in pre-market trading. News 6, Argentina secures new IMF staff-level agreement. The International Monetary Fund reached a staff-level agreement with Argentina on a revised $40 billion program, contingent on congressional approval of new fiscal measures. Argentine bond prices and the peso rallied in offshore trading. News 7, South Korea inflation eases more than expected. South Korea's consumer price index rose 2.3% year-on-year in February, down from 2.8% and below forecasts, moving closer to the central bank's target. The Bank of Korea is now widely expected to consider a policy shift in Q2. That's all for today's news. See you next time.